Most day traders think having multiple entry models is better, but the truth is you only need one. This is the only ICT entry model you'll ever need. Today, I'm going to show you a 3-step process of how to do this and how you can improve your trading today. So the first step, if we look at this example, we have a market structure shift. Our second step is a fair value gap. Now you're going to be using 2 time frames with this entry model. Your first time frame is your higher time frame. That can be whatever you like. For this example, I have the 1 hour chart, and the 5-minute time frame is my smaller time frame. So your higher time frame frames the setup. So we have a market structure shift and a fair value gap that frames our setup. Then when price comes into the fair value gap, if we look here, that is when we go on the lower time frame and we look for the exact same thing. This is the ICT 2022 mentorship model. So we have another market structure shift with a fair value gap on the lower time frame. We then enter on the fair value gap and we target a 1 to 2 risk reward. That is it. This is one of the easiest strategies, but it's very, very, very good, and there's setups every single day. So now let's look at some examples. So once again, I'm going to start on the 1 hour time frame, and I already see a setup that happened earlier today. So what do we see? We see price makes this low here, we go up and we go down, we break that low and create a new low. So this is a market structure shift. Alright, so that's our first step. We have a market structure shift on our higher time frame, which is the 1 hour. Our next step is we wait for a fair value gap to form. We see this candle closes, we form a fair value gap right here. So we can mark out that fair value gap. That is now our second step done. Our third step is we wait for price to come into the fair value gap, and then we go on the 5-minute time frame to see if we can find an entry model. So if you look here, price first comes up into this fair value gap, it comes down, it breaks this low, but there is no fair value gap that broke that low, so there's currently no setup at this point. Price goes and takes out this high, which is also buy side liquidity, and you see price makes a new low. So if we zoom in right here, we can see we have this low here, we have this high here, and then with this black candle we break this low. So we now have a market structure shift, and we created a fair value gap right here. So we have our market structure shift with our fair value gap. So now we have everything we need. We have a higher time frame market structure shift, higher time frame fair value gap, came into the fair value gap, and now we have our lower time frame market structure shift with a fair value gap. So now we could enter this trade. We can set our stop loss at this high, and we can target a 1 to 2 risk reward, which in this case that would have hit. So this is just one example of multiple examples that you'll see every single day. I challenge you to go on the charts and see how often this plays out during New York session, London session, and all the sessions. So just one last time, just so you guys can see it, the 3-step process is market structure shift, fair value gap, price comes into the fair value gap, you then go on your lower time frame, you look for the exact same thing, and then you target a 1 to 2 risk reward. I hope you guys enjoyed this video. If you want to, click the link in my description for my free ultimate trading guide. Make sure to like and subscribe. I'll see you on the next one.